So hello guys, how are you? This is the teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. So as discussed in the last class, we are going to solve the next question of the paper of A-level accounting, AS accounting 9706, variant 22, October-November 2024. The paper which has occurred, which has been examined just 2 days back on October 17th. So I'm going to upload the videos of all the questions. I'm going to solve all the questions one by one. So question number one, we have already solved. We are going for the question number two, that is from ratios. W Limited provided the following effect from the financial statement. Statement of profit and loss is given. Sales, which is wrong actually. Sales, opening inventory, operating expenses, finance cost, taxation. Just the data is given actually. Then statement of financial position, the data is given. Following information is also available. Cash sales were 15% of total sales. So cash sales were 15% of total sales. If you just see the question, that sales revenue is going to be 7,20,000. Out of that, the examiner is basically telling that 15% of the sales is basically your cash sales. So out of total sales, 15% is going to be cash sales. So if you subtract 15% from total sales, you will get credit sales, or you can take 85% of 7,20,000 to get the credit sales. So let's talk about the gross profit margin was 35%. Margin is a gross profit percentage on sales. That is 35%, and sales is given. Inventory turnover was 6.4 times given. Calculate the trade receivable turnover for the ended 31st August formula and calculation. So nowadays, the examiner is also asking for the formula also. The formula is going to be trade receivable over credit sales into number of days in a year. If you just look at the last question means if you just look at the May-June 2024 variant 22, you will have the question of ratios again in that paper also, and it has come again in this year in October-November 2024 variant 22, and I haven't given that question in the guess. If you just look at the examiner report, you will see that most of the students, they have taken in the last May-June attempt, they have taken total sales rather than the credit sales in analyzing this ratio. This has become the main problem, that the students are not able to get the correct answer. So trade receivables, let's see how much are the trade receivables, 66,000, and the credit sales as discussed earlier with you, that is going to be 7,20,000 is the total sales, and 15% is the cash sales, and the remaining is going to be the credit sales. So 7,20,000 into 85%. So 6,12,000 is going to be the credit sales, or 15% you can calculate, and then you can subtract 15% from 7,20,000 to get credit sale. So what is going to be the answer of trade receivable turnover ratio in days? 66,000 divided by 612,000 into 365. So answer is 39.36. 39.36. Always remember that you have to take it as a whole number. So the answer is going to be, that is going to be 40 days, because days can never be in 39.36 days. It's not possible. So you have to write it in 40 days. It means that you are collecting the amount from the trade receivables in 40 days after every 40 days. So we're done with that. Then explain the difference between gross margin, gross profit margin, and markup. So it's very simple. Gross profit margin is the gross profit percentage on sales. Gross profit margin is a gross profit percentage on the amount of sales, where markup is a gross profit percentage on cost. So markup is a gross profit percentage on cost of sales. State the formula for the rate of inventory turnover in times and calculate the value of the closing inventory. So let's see. The formula for inventory turnover is equal to cost of sales divided by average inventory. I'm using the abbreviation actually. And if you just look at the question, the formula I've written, the inventory turnover ratio is already given, that is 6.4 times. So I can write that the inventory turnover is 6.4 times. Okay. So average inventory is equal to opening inventory plus closing inventory divided by 2. We have opening inventory. but we don't have closing inventory because the next requirement is basically asking us to have the value of closing inventory, which is not given, right? So if you just look at the question again, the opening inventory is given, and the examiner has given that the gross profit margin was 35%. So gross profit margin is the gross profit percentage on sales, and sales is given 7,20,000. So we can calculate the gross profit. Gross profit is equal to 7,20,000 into 35%. You will get the amount of gross profit, which is quite easy to calculate. That the amount of gross profit is going to be how much? Let me calculate it. 7,20,000 into, that is 2,52,000, right? So I can find the cost of sales now easily. How come, sir? Because cost of sale is equal to easy sales minus gross profit. So sales is going to be how much? 7,20,000 is the amount of sales minus gross profit is 252,000. You can find the amount of cost of sales, which is going to be, let me calculate it, 7,20,000 minus 252,000, that is 468,000. So 468,000 is the amount of cost of sales. Now I can write over here, cost of sales is 4,68,000 divided by average inventory. I don't know. It's not given. And the inventory turnover is 6.4 times. So that average inventory will move towards the right side. Then we can say that average inventory is equal to 468,000 divided by 6.4. 468,000 divided by 6.4. You will get the answer of the average inventory. So let's see the question again. That is 35%. So if you just look at 65, just a minute. Okay, right? So now let's go for the calculation of, 468,000 divided by 6.4. Let me do it. 6.4, you will get the amount of 73125 is the amount of average inventory. 73125 is the amount of average inventory. Now we know that average inventory is equal to opening inventory plus closing inventory divided by 2, because we need to find the closing inventory, which is not given, which is the requirement actually. So 73125 is equal to, let's see what is the opening inventory. Opening inventory is 76,000. So I will write 76,000 plus closing inventory, we don't know, divided by 2. So 2 will be multiplied by going there. 2 is going to be multiplied by 73125. And then 76,000 will be subtracted from the total to get the amount of closing inventory. 73125 into 2 is 146,146,250 and minus 76,000. You will get the amount of closing inventory, which is the requirement of the question. So 146,250 minus 76,000, 70250 is going to be the closing inventory. So we'll get the answer that 70250 is the closing inventory, which is the requirement of the question. We have calculated that. Next, let's see. Let me get the value of the closing inventory. We are done with that. Now you have to find the return on capital employed formula and the answer for the return on capital employed. So the formula is going to be for the return on capital employed. Let me write it also. The formula is going to be operating profit, not the net profit, it is the operating profit, divided by capital employed into 100. Now you can consider that what is operating profit? Gross profit minus operating expenses is equal to operating profit. And gross profit minus operating expenses will be equal to operating profit. So operating profit divided by capital employed into 100 is the formula. So let's calculate operating profit and capital employed both, because both are not given. So if we just see the statement of profit and loss, which is given, we have been seeing that operating expenses are given. right? And we have already calculated the gross profit. So gross profit minus operating expenses, we will get profit from operation, which is the operating profit. Finance cost, we don't need to subtract it. Taxation, we don't need to subtract it because we need profit from operation, right? Or operating profit. So profit from operation is going to be gross profit, which is 252,000 minus operating expenses, which are given in the question, that is 165,000 minus 165,000 divided by capital employed. Let's calculate the capital employed first. Right here, capital employed is equal to the capital which we have employed in the question, that is capital plus non-current liability. But as this question is basically related to company, so the formula is going to be equity plus non-current liability. Equity plus non-current liability. And equity includes share capital, capital reserves, and revenue reserves, obviously, plus non-current liability. So if we just look at the question, share capital is given 5,55,000. Retained earnings, general reserve, share premium not given. Okay. Then we'll take 5,50,000 and retained earnings, that is 95,000. So I'll write over here 5,50,000 plus 95,000 and the non-current liability, which is the debenture, actually 8% debenture, and that is 45,000 already given in the question. We'll be able to find the capital employed. Let me calculate it. 5,50,000 plus 95,000 plus 45,000. The answer is 6,90,000. So 6,90,000 is going to be the capital employed. So we are going to divide the profit from operation with the capital employed, that is 6,90,000, multiply by 100 because it's a percentage. Return on a capital employed basically tells you that how much return you are getting on your investment. And you have made an investment through two different sources. One is from the equity or the capital, and the other is you have taken a loan, which is a non-current liability. The 2,52,000 minus 165,000, that is 87,000 divided by 6,90,000 and multiplied by 100. So let me calculate it first. Divide by 6,90,000 multiplied by 100. The answer is 12.61%. 12.61% is the answer. I have rounded out also. 12.61% is the answer of return on capital employed. So how much return you are getting on your capital employed? That is 12.61%. Okay. So we have calculated that knowing the formula used. Now the director of WM use accounting ratios to compare the company's progress with other businesses. They are aware that such comparisons should only be made with companies in similar business sectors. Obviously, comparison can be made with the similar business. So, but they should also be aware that such comparison has limitations. To state three other limitations of accounting ratio. So I can tell you easily that nature and size of the business can differ. So nature and size of the business, if that is different, then it is difficult to compare the businesses. Then accounting ratios basically use historic data, right? The values, the calculations are based on past data. It does not tell anything about the future. Then different accounting procedures are adopted by different companies. Different businesses adopt different accounting procedures. They might result into different, they might, take out as different results. And when different results that cannot be compared easily. Then accounting ratios talks about only financial factors. It does not talk about non-financial factors, but it does affect the business, especially when we are going to compare the business with some other businesses, right? So this is how we have completed this question. And now, inshallah, in the next class, I'll go for the third question, which is from company accounts and along with errors. Thank you very much. Feel free to ask me any question on my YouTube channel or my you can text me on my number 0333 471 2897. Thank you.